Alright, welcome guys. Joe here from JCS-Charting. Seasonality has been quite off for this year. Seasonality suggested a low at the end of February, beginning of March, right here. We got the double top instead and saw the selling, that intense selling straight after into the beginning of April, and then we got that huge rally to new all-time highs, which we anticipated. DAX peaked out here. This is the actual pass here, that dark blue line. We peaked out at the beginning of June. The US markets, they followed last week with new all-time highs as well. Now I want you to focus on, while we move down here, this is the average here, that blue line of DAX average seasonality, and the red line is a presidential year concerning seasonality, but this is data from the Dow Jones Industrials. However, while we look at that June peak, that selling, that moderate selling, we have to say, that was suggested into the end of June, and this is actually what happened. After that, DAX picked up again, and now there's actually a rally suggested into the end of July, beginning of August. Also, the presidential seasonality is suggesting that. We have a look now if seasonality is actually working out this time. Let's hop into it. This chart compares DAX to the three major US markets. DAX is shown in green here, and you see the total outperformance of the German index compared to the other three. You see the relative percentage here on the right. Beside from that, you also see that DAX made that all-time high at the beginning of June, while the US markets, all three, failed to do so. After that, they moved sideways, while DAX started its decline into the end of June. And then the US markets, they actually started to pick up bullish momentum and went for new all-time highs last week, while DAX failed to do so. Now the big question is DAX leading? Is DAX once again a month ahead of the NASDAQ? There's a nice correlation between these two. That means, are we seeing now that selling we saw at DAX for about 2 weeks at the US market into the middle of July before they pick up momentum, and DAX is leading with new all-time highs? That means we see large divergence between Europe and the US markets. Or is DAX going here for a second leg down with the US markets, and then they are back in sync in the middle of July? Okay, we start off with volatility, the VDAX. It followed our projection very, very nicely. We came up with that projection right here. It did that little pop-up on that candle here on the 23rd, and then it went for that sell into the suggested low on the 4th of July. The low was made on the 3rd. We got that divergence, but the index, the performance index DAX, did not make new all-time highs. Now, I tend to believe that we are going for that alternative here shown in red. We might see a little pop-up next week at the beginning of weeks, followed by another volatility crush into July to hit that blue dashed line here to trigger a pattern which might cause much more volatility in August. Okay, you see here an H4 time frame, Cetra indication, and this is our latest Elliott Wave count. We came up with that right when we made that 4 right here, and I said, well, most likely there's another leg missing to the upside. We got that gap rally, that bubble rally once again. We closed that gap right here with that dip. Now the big question is this, I'm pretty sure this is either a leg A or a 1. I tend to believe it's a A, and we're gonna see a B and a C up to finish off wave 5. The big question is was that the first leg to the downside? So this is an A, B, and we're gonna see a C at the beginning of next week before we start rallying into July. The big number you should watch is 23,620. This is the start of that last sub-cycle, and once that breaks, we most likely see lower to close that gap here at 23,497. Once it's closed, I would suggest to buy again, and this time I really mean buying into new all-time highs. That is the most likely scenario for me right now. At my last update, I came up with that pattern here and that potential broadening top in red and that potential bearish shark pattern, which misses leg C to the upside. We were somewhere right here, I believe. The problem is that we run out of time concerning our ATHs, our astro cycles. Now we could get a low, a moderate or temporary low instead, and we push into the next ATH in July. Members know about that date, and if you want to join or want to know more about it, you're welcome to join our community at www.jcs-charting.com. And once you join, you see something like that. You should start off with that welcome page. There's a welcoming video which shows you how that channel works. It's a bit different compared to others. They have much more information. There are 3 threads I really recommend to read through these. Advanced members get a lot of sections on trading psychology, and they also get the gamma, the open interest and volume reports for DAX, the S&P 500, NASDAQ, and the VIX, and there are chat rooms. As you can see, the main channels are divided into their own time frames. There's a stock channel, my favorite stock, by the way, Big Bear, which tripled over the last few weeks. And yeah, there are also plenty of tutorials. Once you open that, you see a lot of pattern tutorials. I talk about cycles. I'm presently writing Elliott Waves because that's a very large chapter. I explain my sequences and so on. So you get plenty of information. For yeah, advanced membership is just $74.99. Yeah, next is the S&P 500. This is my Discord main channel here of the S&P 500, the H1 thread. That is our outlook from last weekend, the 30th of June. And you see we expected another push here as wave 5 of wave 3, a moderate decline as wave 4. It was actually much shallower, and then we went for a final wave 5. While we go down here, you see how we peaked out as wave 5, and we didn't get below that red sequence here, by the way, that was holding. I kept telling that my members, as long as 6178 holds on the hour, this can be a very shallow wave 4. This is actually what happened. Wave 5 started with new all-time highs. I came up with that green sequence and our projection into 6278, and then we peaked out last Thursday right there, and yeah, that was the last update from Friday. This is how it works at JCS-Charting. Yeah, we have a quick look at the VIX daily chart here. I was showing that last week already. That projection has been anticipated by our servers on time. The same here. We suggested that cycle low around the 11th of June, and now we suggested another low around the 4th. Markets were closed. So the 3rd actually marked that low in volatility for a big cycle low. That is one of the reasons why we actually switched last Thursday from, we sold all our long positions at the S&P 500, also at the NASDAQ, and we went short. That volatility here, that VIX indication, is from the CBOE, so that's from the Board of Chicago. and so the futures, and they were running on Friday, and we saw already that large gap up in volatility and that spike, while the futures were selling off from that highs on Thursday by 30 points. So that suggests actually a sell-off into July. Okay, this is the last chart I'm going to show you. Probably the most important one. It's a daily cash chart here. You see here, first of all, how our projections worked out very nicely considering timing and price. The ADT determined our timing, and the sequences determine our pricing. Now we hit 62.79. It has been in the chart for the last 5 weeks. It is the green 138, which likes to be turning point, and we are in the middle of that ADT, which started on Friday. That was now a public holiday, so it's actually on the 3rd till the 7th. You have to give it also a bit more tolerance in time. That means timing in trading days. And now listen carefully. Futures already were selling about 40 points to 62.40. So I assume there's going to be a gap down on Monday. Monday can be very important. If selling continues on Monday, the entire cash session, we most likely see selling into July, into the middle of July at least. But, and now this might be important concerning seasonality. If they cover that gap down immediately, or gap down to short selling, and then they start rallying for the rest of the cash session, that top is not the final top for the summer. And then actually that July seasonality could kick in, that we see continuous buying pressure for the whole month of July. Just be aware of that. Monday could be the indicator, the indicating signal for that. NASDAQ, very similar story to the S&P 500. That was my outlook from last weekend for members. We were going for a final wave 5 followed by a wave 4. This actually worked out nicely, and a final wave 5. This is now the opening. We set wave 5 to finish wave 3 here. We went a bit deeper than the S&P 500. NASDAQ actually tested that low here 3 times. We went down there with another leg as our final wave 4. They like to be ugly, and they are designed to shake off basically all participants. And then we went for our green sequence right into the middle of our ADT. That is what it looked like. And you see that path here, that projection was available for members the entire week, and then we started to sell at the futures on Friday only. So we have to wait what the cash is actually opening at on Monday. The NASDAQ is a bit different than the S&P 500 considering Elliott waves. I see we finished wave 3 right here, and we went for a very shallow wave 4 in my opinion, and this is wave 5. The minimum requirements are already set, but it is allowed to squeeze much higher. I tell you now why. Because we overrun that 138. We just did a moderate decline, and then we pushed or gapped up. Gapped through there, and now it opened actually the target at 23,583. The 100% target, that is a duplication of wave 1. This occurred right here at the bottom after we were setting the low on April 7th. Should give us at least a push to 23,192. Keep in mind that Elliott is just suggesting price levels. We don't really use it for our trading ideas, but the all-time high right here, or even this one, met already the minimum requirements as a completed wave 5. Even it doesn't look finished to me. And we're gonna switch into another H4. And you see here that channel, which started in the middle of May, very clean. This is our H4 JFD indication, by the way. So this was a very clean channel, and it started to break right here. And it did a slight pullback. It came right back on it. It tried to jump out again, and then there was that selling on Friday at the futures. The thing is, I'm coming up with that here is my sequence at 22,508 triggered for higher. And it triggered here with several candles. It pulled back on a very moderate base, and NASDAQ likes to do that. It likes to double bottom, and this is a triple bottom. It likes to retest these lows that happened once and twice, and then it went up. And since that sequence here triggered for minimum targets of 23,010 and 23,213, be aware that we could squeeze into the entire next week. If this is just something like that, or something like that here, Monday should tell us the way. We have a quick look at the gamma change of the NASDAQ. That is very interesting what's happening here. Huge gamma exposure. That means a huge increase. That's what we look for, significant changes at the 24,000 level, also at the 21,000 level. And NASDAQ is right in between, right here. Gamma exposure increased here a lot. That means actually market makers are positioning themselves to keep these levels for September. But that spike here and that spike here means we should see these levels, both levels, before September. That means summer correction could go into 20,000. We might see 24,000 before, or the other way around. That's what the gamma is telling us. Monday, again, should give us a hint if we see a continuous squeeze into July. Be aware of that. Last but not least, for the indexes, the Dow, we finished the min targets of that blue sequence, 44,635. We took all our longs out here as well, by the way. 45,228 means new all-time highs, and that would also set up most likely divergence in the Dow theory. I'm going to show you in a minute. Before we look into the Dow theory, you see here that inverted shoulder head shoulder pattern. I was posting that on X actually 2 weeks ago already. Here's the all-time high at 45,054, so we're just hanging below it. We triggered that green sequence. That means these are here our min targets. We're supposed to hit them before we turn around, and that means this means the weekly is going to see a divergence if the transportations fail to get over 17,845, while the Dow is breaking the all-time high of 45,054. That is that divergence here, that idea, and keep in mind, if we see that divergence, it likes to develop over days or even over weeks. Concerning my setups, members know I switched on last Thursday. Advanced members know. So I told you about that Monday. We might jump back on the train to the upside, but that is quite risky. I'll let my members know, and we gonna have a look at a few stocks now. I'm gonna show you Big Bear again because that's by now my favorite one. We determined here our buying zone at 234. That worked out perfectly. These are US dollar prices, and then we came up last week or the previous week with that blue sequence, and we were hitting that on the dot at 825. Isn't that amazing? And we reversed right at that 161 level. Coinbase, we came up with that head shoulder pattern, that inverted bullish bottoming pattern. We were buying that here in that green zone. We were running a green sequence, which I all took out of the chart. You can watch that Coinbase example, that X, or I think I put it up in my last video as well. But now let's come to the level of 360. That is the trigger for that blue sequence, which triggered for higher. That means that pullback should have been bought, and you have to be very careful with shorts here. Before we hit 443, that's our second min target. So that should be hit before we actually turn around. By the way, crypto. A lot of people see their summer correction as well. I see crypto very bullish for July. Ethereum, Bitcoin, I'm going to show you the Bitcoin chart in a little bit as well. I'm bullish there for the summer, at least for July. We're still focusing on Apple for the 220 area. We came up with that bullish wave wedge here during that sell-off on April 7th. Yes, and we bought 170 on the dot, by the way. Actually 169. I think we got it at the pre-market. We bought the low exactly. We went up, we went sideways for about 1.5 months. And then, yeah, we came up with that selling zone, that red zone. We expect to break 220. We also expect that we get the daily close above 220. We pull back into summer, and then we hit our min targets of 240 for the green sequence, so even higher. 251, 254 is the next level coming up. Also, one of my favorites, Basler. They make security cameras, German company. And here you see how our cycles worked out perfectly. We came up with that green sequence, which finished right here. We came up with another one that hit the min targets, and it's time to take profits here. If you were riding that entire rally, we tripled that here almost as well, at least when we finished that green sequence around 1449. This is euro indication, by the way, etc. stock market. Also a nice one, TUI. We actually came up with that descending broadening wedge somewhere right here. It triggered last week. It also triggered that green sequence. So that pullback, or even that pullback, should have been bought. That was a classic ABC correction. Now we triggered that descending broadening wedge for higher targets, and they are at 1049 and 1109 euros. Note 805 is the second min target, which usually gets hit as a minimum. I expect 851 as a minimum. Last but not least, Tesla. I'm still very bullish on this one because it triggered that green sequence here for higher above 344 on the daily close. That means we should see at least $400. If it goes that way, that supports that blue sequence as well. I assume we run even higher into that zone here, between 412 to 436 before we see a summer correction at Tesla. A quick look at gold, 4-hour time frame, JFD indication. We had a lot of bullish cycles. This one and this one, they were all anticipated. We were forecasting these lows here. Then they started to turn into a bearish cycle twice in a row, and usually after a bearish cycle there is a bullish one again. This one here seems to be the bullish one. I assume we might see another hit of that red trend line here, which got confirmed on last Thursday. So we might see another spike down here. That green sequence is almost finished. It hit them in target, so take that out. But this one here is going to be important. 34.26. As soon as we do another dive or go straight up to hit 34.26, that opens actually targets. We also have that inverted shoulder, head shoulder pattern here. Yeah, be aware we could see another quick dive down into that cycle low before we actually pick up that rally again. Bitcoin, 4-hour time frame, very nice descending broadening wedge in a nice ABC correction pattern, and then the impulse to the upside. It triggered that descending broadening wedge right here. We finished that blue sequence, and we are running into a sub-cycle low that weekend or even tomorrow morning. The descending broadening wedge got much higher targets, 120,000 and 122,005 100. I will come up with a sequence, a new one for members after that video. So if you're interested in Bitcoin as well, I update that on a regular basis as well. That's about it for today. I hope you liked that bit longer video of 25 minutes. Leave me a like or nice comment, and I wish you a nice remaining long weekend. I see my members tomorrow. Have a nice remaining Sunday. Bye bye.